let's get started here. I'm almost a little giddy right now just because we've got two of the best in the business on the call here today. I want to introduce Steve Arnold. He's been here for over 8 years. Steve, introduce yourself, please.
Thank you, John. Hi, everybody. Steve Arnold, East Coast, Florida, live in Palm Beach County. In my 9th year with Angel Oak and 20 years in the non-QM, non-conforming space.
Yeah, great. And then also, I know a few would probably have seen Scott before. Scott Grubel, please introduce yourself.
Thank you, John. Hello, everybody. I'm Scott Grubel, account executive here in Broward County, Florida. Been with Angel Oak since 2016, and looking forward to go over some of the details on our products and programs in this environment right now.
Well, again, guys, we have the best in the business here. Let's do a deep dive into our programs. We're going to cover them all. And but before we do jump into bank statements, we like to do a little quick survey here. Take about 10, 15 seconds. The question is, who has originated a bank statement loan in the last 12 months? So this is a great program. Well, the poll, did I launch the poll here? Great. A lot of people participating in the poll. And this is encouraging. Seems like, wow, about 70% have not. And why I say it's encouraging, the last polls we've done, this is, I think, our 17th or 18th month in a row of doing these product webinars. And we've usually been around 80% have not closed a non-QM, a bank statement loan specifically in the last 12 months. So that number's getting better. So Steve, take us through some of the highlights of our bank statement program.
Awesome. Thank you. Thanks, everybody, and thanks for the opportunity. That number actually is quite surprising. That the bank statement program has been my #1 program for the last 20 years. And I just think it's a tremendous opportunity for those of you that have not done it to capture quite a bit of the market that you haven't done before. There are over, I think it's 36%, over 56 or 59 million folks in the United States that would qualify for this based on being self-employed or freelancers or 1099 contractors. So the opportunity is just tremendous. So the way the program works, qualify up to $3 million loan amount. Minimum loan amount is $150,000. We offer a 12 and a 24-month bank statement program. Business or personal, cannot combine, it's one or the other. If the borrower owns 2 separate businesses, we can use up to 2 separate accounts as long as there's no obvious commingling or transfers. We can use 2 accounts for a business or 1 on the personal. As far as the seasoning of any housing events, foreclosures, short sales, bankruptcies, deed and lieu, loan modifications, it's only 24-month seasoning on those. Rates on all of our programs, 30-year fixed across the board. You must be truly self-employed or a 1099 contractor for the 24 months. If you were going to use a business account for income, you must be a minimum of 50% owner of that business. If you are to use the personal bank statements, then you just must be a minimum of a 25% owner of the company. Purchase, refi, cash out, rate and term, delayed financing is offered on this product as well. Owner-occupied, second homes, investments, all qualify. We do have a 1099 program which is available within this platform of the bank statement program. So it's the same LTVs, the same rates, et cetera, would apply. The advantage of doing a 1099 as opposed to, say, a full year of bank statements, and I always like to use the example of, say, a realtor. All realtors are 1099. And if the realtor, the borrower, say, uses multiple bank accounts, 2 personal accounts or business and 2 personal, and splits up their commissions, then maybe 1 account won't qualify. So by using a 1099 program, it could be simpler and ideal. I would just need a Form 1099 from last year, 2021, which will give me that gross income, and then a year-to-date, 1-page commission earnings printout from the broker, or year-to-date bank statements, and I can use that as opposed to a full year of the bank statements. Typically, that'll give us more income because I'm using the full figure on the 1099 versus just the one specific bank account. Really good alternative for the independent contractors. We do offer an IO available. It's a 40-30. As far as expense ratio, this is important. The way it works is, if by default, we will use a 50% expense factor to calculate the income for you. However, if you were to obtain a simple 1 or 2 sentence letter from any verifiable third-party accountant, CPA, tax preparer, bookkeeping company, and that reflects less than a 50%, which is typical for this type of industry, whatever the business may be, we can use a lower expense factor than the 50. On businesses, down to a 30%. If it's a 1099 contractor, freelancer, and I always like to use that realtor example again, their expenses may be a minimum of 15 or 18 or 20%. We can use that as well. Non-warrantable condos are considered and allowed. And any loan amount equal to or greater than a 1.5 million, we do require a second full appraisal on that.
Hey, thanks, Steve. You got a big fan here, Jose Pina Herrera. So Steve's the best AE in the business. So thank you, Jose. And Christina, thank you for being a fan of Angel Oak also. So let's get into some of these things, guys. One of the statistics I like to share, and which goes to show you that this borrower and this segment of borrowers is not going away. In 2020, new business applications increased by 24% over 2019, right? So, and we don't have the statistics yet for 2021, but I'm going to figure it's going to continue to grow. So, based on what Steve said, anyone who applied for that business application in the first quarter of 2020, guess what? They're eligible right now for our business bank statement program and going forward. So this segment is going to continue to grow. So Scotty, share with us a couple of questions we have here. What kind of score do you need for a 90% LTV?
Sure. For 90% loan to value, the requirement is a 700 credit score.
Hey, Scotty, give us some of the other bucket breakdowns, because those questions are still coming in for, then what's for an 85, what's going to get them an 80% and down to the low score of 600 too.
Sure. So for an 85% LTV, which would be the next step down, you only need a 660 score. And then to get 80% loan to value would be a 640 credit score. The program actually goes down as low as 600 credit score, which a lot of people are not aware of. You can do a bank statement program with a 600 credit score. That'll go up to a 70% loan to value. So to recap, 600 credit score gets you to 70, 640 will get you to 80, 660 will get you to 85 LTV, and then a 700 credit score will get you up to 90% loan to value.
So, hey, Jack, we will get a copy of this presentation out to you. Like I said, everyone, this is being recorded. Please give us your questions here. If we don't get to your question, we will have your AE reach out to you and get that question answered before, I believe before end of the day, if not, definitely by tomorrow morning. Another question here from Timberley. Will conforming loan limits work on this program, Steve?
So as far as the loan limits, we're not bound by those. And as far as there's no PMI anyway, but as far as the loan limits, depending upon your credit score, up to 3 million loan amount.
Yep. And then Scotty, prepayment penalties. Are there any prepayment penalties? Sorry, on any of these on the bank statement program? Sorry.
Yeah, it's a great question, a question we get commonly. So on all of our programs, there are no prepayment penalties on primaries and second homes. The only time you would see a prepayment penalty applied would be to an investment property, of which we will always offer options for buy downs, reductions of the prepayment penalty, or eliminating it as well.
Hey, Steve, you touched on it briefly. You mentioned delayed financing. Can you go a little bit more specific how delayed financing works, especially obviously the area of Florida you're in is extremely hot market. So talk a little bit about delayed financing, please.
Awesome. Yeah, especially now we're seeing a lot of pressure derived from the sellers and the realtors in this hot market. You list a house for sale, it's under contract the same day and multiple offers. So we see a lot of pressure being put on the mortgage broker, and then in thus in return they want to know how quick they can close along with us. So if somebody is up against the wall and they have to pay cash because they in order to obtain and get that contract executed, buyer and seller, they may want to pay cash and then recoup the cash anytime thereafter, and we call that delayed financing. So if they're going to pay cash for the house or obtain private hard money financing short term, as long as it's within 60 months, so the day after they close, up to 6 months, we will call that delayed financing. We treat it along the same guidelines as a purchase, meaning that there's no rate hit for the cash out, and we can do it immediately, even the day after closing. They can apply for delayed financing.
Yep.
Yeah, so that's thank you, Steve, and that's extremely important, and not just in the Florida market. We're seeing an entire Sun Belt, multiple offers. So don't lose out on still gaining or satisfying that customer and putting that cash back in their hands. Scotty, a couple questions here. Can you buy down the rate? Obviously, rate sensitivity is becoming a lot more of a topic these days, not just in the conventional world.
Yeah, big topic. You can buy down the rate on any of these programs down to the floor rate. Each program will have its own specific floor rate that your account executive can share with you, and you can buy your rate down to the floor rate for that program.
Great. And then Steve, talk about, obviously you both are in Florida, talk about what we can do for second homes, LTV for second homes, and just help us out here a little bit on that.
Absolutely. A lot of requests. I'm seeing a lot of folks from out of state even purchasing second vacation homes and investments. It's going to be the same for both. A second home and an investment is going to be the same. With a 640 score, we can go up to an 80 LTV. And if they have a 660 mid score, 85 LTV, loan amounts up to $2 million.
And that's a big one. That's a big one, John. Like Steve just mentioned, I think that it's important for everybody out there to kind of make note of is 85% LTV on a second home or an investment property. Bank statement program is pretty strong. So definitely make note of that one.
Yeah, Scotty, talk about, talk a little bit while you talk about that. I've been on these presentations with you before, and talk about condos, non-warrantables, and how we're different from what Fannie is doing on their side.
Yep. So we've always done non-warrantable condos, but I think specific to today's market is we have not changed our condo policy or our condo review policy or requirements at all the way Fannie Freddie did towards the end of last year. We're not requiring any of the reports, any of the inspections, any of those items that Fannie Freddie are requiring today. We do not require. Our process has always been the same. We have our condo questionnaire, Angel Oak condo questionnaire that we require to be completed. We don't even require a budget because all of the information we need to make a decision is right there on that condo. So we have seen a huge uptick in condo business coming our way. We've been helping brokers and loan officers save a lot of condo deals that went conventional, only to find out that because of the new Fannie Freddie requirements, the project is not qualifying with them. So they end up coming our way and we're able to get them saved on those loans. Obviously, and this applies to all of our products and programs, but there's a lot of reasons that a condo can be non-warrantable. It could be the most common one, a reserve issue. It could be an investor concentration issue. It could be a litigation issue, et cetera. Where we differ and we can really help add value to everybody on this call's business is that for the reserves specifically, as we all know, Fannie Freddie will only look at the reserves that are collected on the current year's budget. We will use not only what's on the current year's budget, but any reserve account that the association has previously established with balance in it from previous year's collections. What a lot of people don't realize is that a lot of these associations that are not collecting 10% in the current year budget, the reason they're doing that is because they've already have this account that's funded, so they don't want to hit the unit owners with a huge collection if it's not necessary. Again, where we differ is we can use a combination of both numbers. The separate account from previous year's collections, along with what's being collected in this year's budget to meet the 10% requirement. Litigations we're very flexible on, as long as it's not structural or safety related. For the most part, we're okay with them. We can go up to 100% investor concentration on condos. We do require no individual or entity own more than 15%, but we can go up to 100% total investor concentration. So again, a lot of flexibility on condos. I think that's another really important note for everyone to take down, because again, we've been seeing a big uptick in condos, condo loans coming our way.
Yeah, and Matt asked about flyers. Matt, we're going to go over our marketing tools that you have access to if you have login credentials. So we'll go over that. Scotty, thanks. I think that the information you share on condos are extremely critical. And there's no LTV reduction. There's another question here. There's no LTV reduction for a non-warrantable condo, only if it's new construction and there's certain, closed and a certain percentage that have to be closed and sold. So great question.
No hit to the rate for a condo either.
Great point. Great. Yeah, so Joanne, so hopefully we add that. There is no max LTV. I mean, there is a max, but there's no reduction in LTV for condos on that. So kind of, Steve, just go over what our DTI is on the front and back for bank statements, please.
Sure. So front housing is going to be a 40 maximum, and on the back, total all-in consumer liabilities up to 50. Great.
Scotty, question here. What's the difference in pricing really from a 12 to a 24?
For the most part, it's an eighth of a point. When you get up to your higher LTVs, it can jump to a quarter of a point difference. At the end of the day, we're going to reward the borrower if they're willing to give us, a bigger picture of their income on the 24 months. So think of it as no different than a full doc versus a one-year tax return program for a self-employed borrower. Anywhere you go to do a one-year tax return program, there's a bump to the rate. It's pretty similar on the bank statement side. 12-month bank statements will be a slightly higher than 24 months.
Thank you, Scott. Julia, hopefully that answered your question. And Julia, if you're out there, one of the things we've been really pushing our brokers to do, if you're working with a self-employed borrower right off the bat, while you're getting their tax returns, why not get their bank statements and go down parallel paths? And Julia, the beautiful thing about that is, Scott, I'll let you talk about our bank statement review team. I'll let you talk about that.
Yeah, it's the process we have in place. I think it just makes it so easy and simple for our customers, brokers, loan officers to use. We do all of the income calculation for you. So as a loan officer, all you really need to do is collect the bank statements from your customer, send them over to us, upload them through our portal security for a pre-approval request, along with your credit and your 1003. And we will actually review them and do the full income review for you. Within 24 to 48 hours, you will have a full income calculation completed with a monthly qualifying income number that you can now do a pre-approval with to give to your customer. And this is huge because think about it, we're actually pre-underwriting the income and giving you a reviewed and pre-underwritten pre-approval with a solid income number on it that your borrower can now go out shopping with. They can go make offers on homes with and feel comfortable knowing that this has already been approved and reviewed. So it's huge. Take advantage of it as a loan officer. All you have to do is collect the information and send it to us. We do these all day, every day. We can run the numbers, give you the exact income calculation of what you're using to qualify.
Yeah, I always like to think, this is, people buying luxury homes for the most part aren't W-2 borrowers, right? They're the self-employed borrowers. So as that market gets hot and prices continue to grow, it really, if you're working, I said just before, if you're working with a self-employed borrower, get their tax returns. If you can take them, full doc, great. If not, get the 24 months. Go down those parallel paths. Let us help you, go back to your realtor and say, hey, if they go tax returns, maybe they qualify for a $300,000 house. If they go bank statements, maybe they qualify for a $600,000 house. And this just in, almost 9% of the loans we close are actually for realtors. So think about that as you go to market yourself to your referral source. So, hey, Roman, I think you're having some problems. We have a question box. You can ask any questions you want through that question box, and we'll hopefully get them answered for you. So hopefully you can find that on the screen there for yourself. So, hey guys, it's almost 22 minutes after the hour. Excuse me. We're going to jump to our next most popular program, but before we do, we're going to do another poll here. We're going to launch a poll. Who has closed in the last 12 months a debt service coverage ratio program? So while that's going on, this program has gained a lot of popularity, especially with everyone, new investors, seasoned investors, everyone wanting to get into the market. Specifically, what happened last year when the government put a 7% cap on your portfolio for second homes and for investment properties. Loan level pricing adjustments have also driven people to this program. So let me see, got some poll results here. Wow, okay, almost 80% have not closed a loan, a debt service coverage ratio loan in the last 12 months. So huge opportunity. Put this in your arsenal. Scotty, give us some highlights of our investor cash flow DSCR program.
Yeah, it's a huge opportunity. That's interesting. 80% have not used this program yet to close a loan, because I think this program, obviously along with the bank statement program, but specifically to the market we're in here in South Florida, and I'm sure other parts of the country, this is a program that can really instantly add value to your business, and you have to have under your tool belt. So this program goes up to a 1.5 million loan amount on the high side, and on the low side, it goes down to a $75,000 loan amount. We call it the Investor Cash Flow Program. It's also known out there as the DSCR, the Debt Service Ratio Program. This program is basically for investment properties only. And the way the program works is it is a no income verification, no employment verification, no ratio loan. The qualification is based strictly on the property's cash flow. The minimum debt service ratio is 1.0, but we'll go into some variances later on how we can still get the loan qualified even if your debt service ratio is below 1.0. And here we kind of go into it a little bit. There is no debt service ratio required at all with a minimum 700 FICO and a max of 75 LTV. So John, I like to kind of break this program up for everybody to understand into two categories, right? Category one is 700 credit score and up. If you have a 700 credit score and up at an 80% loan to value, your debt service ratio can actually go to 0.85. In other words, the rental income can be 15% less than what your PITIA is going to be. Okay, the loan would still qualify. Now, with that same 700 credit score, if you do 75% loan to value or less, we now do not require a debt service ratio. So the bottom line is it does not matter what the rental income comes in from your 1007, from your rent schedule, and it doesn't matter how much under the proposed mortgage payment it is, the loan qualifies at a 75% LTV. And to take that a step further, we allow short-term rentals with a 700 credit score and a 75% loan to value. Now, if your borrower does not happen to have the 700 credit score, it's not a problem. We can still do the debt service ratio program. We can still go up to 80% loan to value, but the rent needs to meet the proposed PITIA. So the debt service ratio needs to be a 1.00. As we mentioned earlier, there is no income or employment verification required on this program at all. Short-term rentals are okay, as I mentioned, so that includes VRBOs. Condotels we do not do. We're looking at basically the purchase of a primary, a PUD, or maybe even a condo that is used for those purposes, but can be VRBO'd or Airbnb'd out. This is a big one for everybody to note. We do allow properties to close in an LLC's name. Obviously, experienced investors like to take advantage of closing in an LLC for protection purposes, for tax benefits, et cetera, we do allow you to close in an LLC, not only on this program, but I might add across the board on all of our programs for investment properties. With this program, and as well as our other investment property programs, there is no limit on the total number of properties that your borrower owns. So this differs big time from conventional and what everybody's used to. So take a note of that as well. Borrower can own 30 properties. We're okay with that. We're only looking at qualifying him on this particular property that he's purchasing with us. The borrower must own a primary residence. So this is your main requirement for this program. The borrower needs to own a primary residence, and then they can use the debt service ratio program to purchase an investment property or refinance an existing investment property that they may own. Another common question we get on this is it okay if this is borrower's first investment property? If they're a first-time investor, yes, we are okay with that as long as they own a primary. We can do purchase, cash out, rate and term, and as Steve mentioned earlier, delayed finance on this program. So that's a big one with the delayed financing on this program, because investment properties specifically, investors are bidding for these properties. There's a frenzy out there, at least here in my local market. So a lot of times these investors will jump in with hard money and scoop up the property or cash, and then they'll come back to us within a month or two, or it could be the next day, and say, hey, I want to recover my cash, or I want to get out of this hard money loan. We can do that as a delayed finance transaction. As Steve mentioned, we underwrite it like a purchase, so we can take them up to the max LTV that they would qualify for if they were coming to us to do a purchase. Huge one here, 40-year fixed interest only available. So let me dive into that a little bit, because in my opinion, in this market that we're in right now, a rising rate environment, this feature is going to be critical for everyone to know, to be able to use and help their borrowers with, especially on an investment property. But the way that works is the loan is a 40-year loan. The first 10 years are going to be interest-only payments, and then it will convert to a standard amortized 30-year loan after that. The beauty of that is the entire 40-year term is at the same initially locked interest rate. It does not fluctuate, it does not jump, it does not change. So you're locked into one rate from day one. You have interest-only payments for those first 10 years, and then you convert to standard 30 amortization. So for an investor where cash flow is king, an interest-only feature is huge, because you could reduce their minimum monthly payment significantly, increase their cash flow, and that makes a lot, it basically opens up the door to make a lot more properties available to that investor. And again, we offer that on our other programs, as Steve mentioned, bank statements, primary residence, second home, et cetera. Non-mortgable, go ahead, I'm sorry.
It's like you said, our self-employed borrowers who use bank statements and our investors, it is all about cash flows. Sorry, I didn't mean to interrupt you there. So.
No problem at all. The condos we went over earlier, non-mortgable condos are permitted on this program. And then loan amounts over or greater than or equal to 1.5 million, a borrower's second appraisal must be obtained. So since this particular program caps out at 1.5 million, we're usually not going to run into that. But in the event we made an exception to go above 1.5, because 30% of our loans do carry exceptions, we would require a second appraisal there.
Yeah, so Steve, a couple of questions coming here. Thank you, Scotty. How are we getting that rent comp analysis, Steve?
So as far as the rent comp, if it's a purchase, we're going to use the appraiser's opinion of market rent, which is usually a form 1007 if it's a one unit or single family, and I believe it's a 1025 if it's a multi. If it's a refi, we will either use either that form 1007, or we can use actual proven rent on the actual subject with 3 months of the bank statements showing the rent collected with an executed lease.
Hey, Mike, I know Mike's asked, do we limit who can use this program like a loan officer? Absolutely not. I mean, I'll take care of you, Mike. Call me afterwards. So Scotty, Steve touched on it, 2 unit, 4 unit, talk about LTV allowed on multi-units.
Yep, 2 to 4 units are going to go up to a 75 LTV. Single family, condos, and PUDs up to 80% LTV.
Yeah, and Scott briefly touched on this about loan amounts and us getting exceptions. 30% of the loans we close at Angel Oak don't meet our guidelines. And it's because of experts like Steve and Scott that ask you, that second, third level question. And they're not going to produce a pre-qual for you if we don't already know that that's a loan we're going to close. So hopefully everyone is aware of that. Julia asked about, and Scott touched on this, Julia, this is for refinances and cash out. So we had, and talk about, exceptions. We have an AE also in Florida. She was able to do 10 cash out refis for one borrower because we got the exception up front, and that borrower wanted to go back and invest in additional investment properties. Scotty, I think while we're talking about it, a couple of questions came up here too about can foreign nationals use this program? And I know we're past half the hour, so Scott, just give us a little bit of highlights because it is done on the same program, the debt service coverage ratio. Just cover some highlights of the foreign national portion of the debt service coverage program.
Absolutely, yep. So the foreign national program is housed under the DSCR, under the investor cash flow, and it makes doing a foreign national loan about as easy as you're going to find. Because literally the only thing that we require is going to be obviously the borrower's visa, unless they're in a visa waiver country like Canada, that's not required. And then after that, all they need is 30% down with the funds they're using for closing, along with the reserves, to be in a US bank account. That is literally it. We're treating this the same way as the debt service ratio program. If the rental income covers the proposed payment, the borrower qualifies. So there is no, income verification from their country, CPA letters, needing credit reports or lines of credit from their country. There is no looking into the REO for them from their country. We've eliminated all of that, and we've made doing a foreign national as easy as it can be. The minimum loan amount for foreign national is 75 grand. It also goes up to a 1.5 million. The one difference on foreign national versus the debt service ratio is that for foreign national, it does need to be a 1-to-1. So the rental income needs to cover the proposed payment. But since the max LTV for this program is 70%, that's usually not a problem with 30% down to cover the proposed payment. Your funds to close, as I mentioned earlier, along with your reserves, must be seasoned for 60 days total. So we're going to source it for 60 days back to the borrower, but it has to be in a US bank account for 30 days prior to closing. We set up an ACH auto payment for the borrower to make it nice and easy and simple. And that's pretty much it. We have a list of the eligible visas here as well. Pretty straightforward for what a foreign national is required. No gift funds are allowed on any of our investment properties. And as we mentioned earlier, we can go to 1.5. But I think the key features here, John, is, again, super easy. You're looking at your visa and you're looking at your assets. And literally, you don't need a single thing other than that to qualify a foreign national.
Yes, so Sean, you asked that question earlier. Hopefully we got your answer there regarding that foreign national on the DSCR program. Steve, just reiterate, but even just for, not just for the foreign national, but for the DSCR program, what need, and Scotty covered it, but repeat it again because some people are asking the same question. What's required on the 1003 for a DSCR program, or what's not required?
Well, it's quite simple. For the U.S. citizens, you don't want any income and any employment. Leave that blank. For the foreign national, it's the same, except there's no credit. So as far as the ERLA goes, the 3.4, no income, no employment. You're going to list, as far as the REO section, you're going to list whatever properties they own personally. If they own some in LLCs, you don't have to list it. So whatever they're personally have in their name would be the only thing you fill in on the REO section of a U.S. citizen.
Yeah, so Rosette, hopefully that answered your question there. And thank you, Steve. So let's go on to some of our full doc programs. We're starting to see a lot more. Steve, kind of cover some highlights of our platinum program.
The Platinum is loans up to $3 million. The minimum loan amount for this product is $250. I refer to this as maybe a just missed or an Alt-A type. You're not qualifying conventional, so then you'd roll over and see if you qualify under our Platinum. We'll get into the other full doc program we offer next, called the Portfolio. So Angel Oak offers 2 full doc programs. 4 years of seasoning on any negative housing event for this Platinum program. So 4 years from any foreclosure, short sale, bankruptcy, deed in lieu, loan modification, etc. Owner occupied, second homes, investments, all apply. Same thing across the board. Purchase, cash out, refi, rate and term, delayed financing, all good. Only full doc only. The interest only, the IO also applies to this product. We do offer for self-employed borrowers the 1-year option as opposed to the standard 2-year. Non-warrantables are also considered and allowed on this product. And the same across the board, anything 1.5 and over, we will require a second appraisal.
Right. So let's talk, Scott, we talked about this a little earlier, let's talk about the 1-year tax program, a 1-year tax return program, and how, it's a really, I know Leslie brought it up last month on one of our calls, but it's a great feature here.
Great feature, because on the Platinum program, you only need to be self-employed for 2 years to be able to use the 1-year tax return program feature versus your conventional programs where you need 5 years of self-employment in order to do that. So you have a business owner, opened up a business in the last 3 years, and that business owner filed his taxes and wants to use, he had a better year obviously last year. You can use just that 1 year, most recent year's returns to qualify that borrower without having to meet that 5-year requirement.
Yeah, I like that feature. We were talking to someone yesterday about that, and it's almost a no-brainer. So, so Scott, let's talk about our other, we call it our waterfall of programs. So for full doc, Steve just covered our Platinum. Scotty, why don't you just cover our Portfolio Select?
Absolutely, yep. So like you said, waterfalling down, and Steve mentioned that's your just missed conventional Alt-A program, the Platinum. Your next step from there, if you don't qualify for Platinum, is going to be Portfolio Select. So again, this is a full doc only program. This program credit scores start at 600 versus the Platinum, as you saw, was a 660. We go up to a 90% loan to value as well on this program. And again, no MI on any of our products and programs. This program also goes up to 2.5 million loan amount, and the minimum is a little bit less than Platinum at 125,000. So as you guys can all see, on our non-QM full doc programs, they're all jumbo. They're all jumbo programs. We do not have conforming loan limits that apply. And that's one of the main reasons we get a lot of full doc loans coming our way, is because we can go over those loan amounts. This program begins to get a little bit more relaxed on some of the guidelines. So as you can see, there's only a 1-year seasoning requirement for a foreclosure, a short sale, a deed in lieu, or what we like to call a housing event. There's only a 2-year seasoning requirement for a bankruptcy, as opposed to the 48 months that we saw on the Platinum. Now, to dive a little bit deeper into the bankruptcy portion, for Chapter 13 bankruptcies, and this is a big feature, we use the filing date for seasoning purposes. If the borrower entered into a Chapter 13 and they paid it off and they were discharged as agreed, we'll go off that filing date, which is almost always 36 months or greater. So that's a feature you don't see on conventional. And then obviously Chapter 7 will be off the discharge date. Again, purchase, cash out, rate and term, delayed financing, all available. We do primary, second homes, and investment properties. Our DTI is 50%, so it's pretty much 50% across the board on all of our products and programs, with the one exception of 95 LTV on the Platinum. Gift funds are allowed. So gift funds, we didn't talk a lot about gift funds, John. Let's go over it. So yeah, on primary residence, we can accept gift funds on all of our programs. And the general guideline is, as long as your borrower is bringing 5% of their own money and they can cover the reserves from their all funds, the rest can be a gift from a family member. So it's pretty simple, it's pretty straightforward, and it helps you qualify on a lot of these borrowers. Interest only is available here as well. Non-warrantable condos are available here as well. And again, we have that 1.5 million loan amount where above that, you'll need that second appraisal to go to the 2 or the 2.5.
Yeah, Scotty, we talk about this program almost being that 2-for-1 for that loan officer. You know, especially with houses appreciating like they are, if you come across a borrower like this, why not get them in home ownership, start to accumulate that wealth, and as far as that event, credit event or life event, whatever it is, gets further and further in their rear view mirror, then you could potentially refinance them into a conventional loan. But and during that time, their house is appreciating. So it's a great 2-for-1 program.
Exactly, John. I mean, that's what non-QM full doc is all about. I think it's underutilized because, you know, a lot of people think if I can't get the loan done conventionally on a full doc borrower, that's it. That's the end. Maybe they think hard money. They don't realize these programs are available. These programs are designed to get your borrower into that home of their dreams that they want to buy now and today. It's, you know, sort of like a Band-Aid loan in the sense that they're going to probably build up their credit, get themselves in a better situation overall, or wait for their seasoning on whatever event they had, and then they may refinance out of it to a conventional loan down the road.
Yeah. Well, Scott, while you talked about Portfolio Select, let's talk about another program that falls underneath that Portfolio Select program.
Yep, ITIN program was added not too long ago here. So with the ITIN program, we house it under the Portfolio Select program. Credit score requirement is 600, so the borrower does need to have a credit score under their ITIN number. They should have a full credit report under their ITIN number. We take these up to 75% loan to value, so it's only 25% down. It's a full doc loan, so we treat it just like we would any other full doc borrower in terms of verifying the income. Your loan amounts go up to 2.5, which is pretty strong for an ITIN. Minimum loan amount, 125,000. And everything we just went over is the same that applies here. 1 year seasoning for your housing events, 2 year seasoning for your bankruptcies. This one is for primary residences only on the ITIN program, and it goes up to 50% DTI as well.
Yeah, and Jose, unfortunately, it's ITIN is full doc only. It's not available on the bank statement program. But as this loan continues to perform, and like we've had 38 enhancements in the last 24 months, who knows where this program will go once we get performance done on this. And Steve, we're about a quarter to the top of the hour. Last program we really want to talk about is Asset Qualifier. I know you and Leslie love talking about this program.
So Asset Qualifier is for primary homes only. Minimum credit score is 700. It's written off of our platinum matrices and guidelines. So loans up to $3 million. Minimum loan amount to qualify is $250,000. 75 is going to be your max LTV. Since it's strictly assets only, on the earlier you would not have to put any employment income, and obviously there's going to be no ratios that would apply. It's 5 years out on that product for any negative housing event, foreclosure, short sale, bankruptcy, etc. Purchase, rate and term, and cash out applied. IO is available. Non-warrantables are allowed on this one as well. The big thing on this that to take note of, assets must be sourced and seasoned for 6 months. So it will not apply for someone who just recently sold, say, a business or sold their multi-million-dollar house. I've got to see funds seasoned in an account. It doesn't have to be liquid per se checking account. It could be in any of their mutual funds or 401k or stock portfolio investments combined with savings, money market. So all assets combined, 6 months seasoning to qualify, and the remaining balance must be $500K post-closing assets. And the same would apply anything exceeding 1.5 second appraisal as well.
Yeah, we're starting to see a lot more, not a lot more, but we're starting to see this more. And again, this is just another tool in your tool chest. We're starting to see a little bit more of this program, and maybe, I don't know if it's because of the Great Resignation, people leaving jobs, going to work for themselves. But really, this is someone who in the last 6 months or greater, maybe they sold their business. Maybe they got a divorce settlement, maybe some other type of settlement, and doesn't have a job and wants to purchase a primary. This is a good program to have out there for yourself. So, hey, we've been getting a lot of questions regarding rates and stuff like that. So I don't know who's Scotty. I think I'll have you take us through. And we're going to get to some marketing stuff, I promise you. And everyone, this is being recorded, so we will get this out to you before end of day today. And there's a lot of great questions. We haven't gotten to them all. We will have your account executive reach out to you and answer your questions specifically. So Scotty, take me through a pricing.
Yep. So guys, for everybody on this call, if there's one thing you do after this call, what you want to do is you want to go to our website and you want to bookmark this pre-qualification engine. This is our online pricing engine for all of the non-QM products and programs we just went over. It is up to the second pricing. It is also smart in the sense that it will notify you if your loan is not qualifying for whatever reason. So it's kind of like a qualification engine as well. And it's as simple as just entering the fields in here, and we're gonna go through one and see. So let's put in a jumbo, John. Yep, 750 loan amount. Let's look at what we normally see on a bank statement loan. So let's say 740 credit score, 80% loan to value, and we'll go 24-month bank statement purchase.
As Scott mentioned, a lot of you have been asking for, guidelines, matrices. This is it. In addition to your account executive, this is just as good as having a matrix out there.
Yep. So as you guys will see, once John has entered all the information here pertaining to the scenario, right at the bottom, you're going to see your basic rates and programs. So it's telling you the LTV you requested is 80%. By the way, we can go up to a max LTV of 90% on this program, should you be interested. The par rate at 80%, the way you requested, is a 6.125. As we mentioned, it gives you some of those guidelines. Bankruptcy season is only 24 months. Housing season is 24 months. Your reserve requirement is 6 months, and the lock duration of the pricing that's being quoted is a 30-day lock. Now, if you click on that view rates button, and this is a feature we just added, it's going to give you a quick snapshot of all of the pricing options that are available for this loan for both your borrower paid section with lender credits paid to your borrower or your lender paid section. Obviously, this is not specific to your company's lender paid comp plan, but it's just giving you kind of an idea. Once you submit your pre-approval to your account executive, we're going to give you the full detailed options. But going back to the screen out of here, let's assume you select the par rate here, John, of 6.125. Then the next step for the broker, after they click select option, is going to be, it's going to take you to step 2 of the quick qual engine. We'll scroll up a little bit. There you go. In step 2, it's going to allow you to upload your MISMO 3.4 file if you have it, buttoned up and ready to go. If you do not, you can simply click next. And then in this screen, you'll begin to enter some basic information. So you'll choose your account executive from the drop down. You'll enter your company information, your NMLS, your phone number, email, etc. And then you'll see here at the bottom, you can drag and drop your PDF version of your 1003 securely, your credit report securely, and then here down at the bottom, this loan is a bank statement loan, so you can literally drag and drop all 24 months bank statements right into that box. It saves instantly for you. You get down to the bottom, you answer a couple of questions regarding any BKs or any housing events, and you click submit. It's that easy to upload, price a loan, get your information into our portal, and now that has been submitted to your account executive. So your AE would grab that pre-approval. They would immediately submit the bank statements to be calculated by the bank statement review desk. And as soon as that income calculation comes back, your account executive, assuming it works, will send you back a full broken down pre-approval.
Yeah, and what Scott says here, it's really important. We mentioned it when we went over bank statement, but we're calculating that income at the pre-qual stage. So your borrower is going out with a pre-qual, of what the income that we're going to use throughout the entire process. So I think that's critical, and knowing that up front. I think Matt asked something regarding lender paid comp. So you saw the breakdown there. We went through the pricing stack right there. I believe, Scott, to help me out here, what's the max lender paid comp? Is it 2.75 or 2.875?
2.75 is the max lender paid comp plan that we allow for any accounts.
And we're starting to see a lot more people go borrower paid too these days too. So we have that option.
We are, and on the borrower paid side, the broker can charge up to 3% broker fee. And keep in mind, we offer numerous options for lender credits. So for example, if you did choose to charge a 3% broker fee, you would be able to select an option if you wanted to of a rate that pays 2% lender credit back to your customer to offset it.
So Steve, we're going to finish up with a lot of people have been asking about flyers and so forth. Let me know if you guys can still see my screen when the portal comes up.
Yeah.
Can you guys see that?
Yes.
Okay, great. So, a lot of people have been asking about flyers, how do I market these programs? Because, we have a lot of people on this call, and really I challenge all of you to we've got the best marketing department in the country. I really challenge you to really use these tools to market yourself differently. So Steve, just give us some, let's talk a little bit about flyers here.
So the marketing portal and the whole website in general is fantastic for providing all kinds of material and training videos. Anything you need is going to be at your fingertips, from the condo questionnaires to the bank statement questionnaire to mortgagee clause. Everything is readily available. But as far as going to the marketing portal, once you obtain your credentials, which is usually within 24 hours of filling out our user form, you're free to go to the marketing portal. You simply click on whichever flyer you'd like, whether it's bank statements or DSCR, and fill in the blanks. It's going to customize it for you based on the information that you want it to show. So it's not going to have anything represented or reflected from Angel Oak. It's going to have your company's logo. It can have your picture. It can have your name and your contact. Just phenomenal, first class, free, customizable marketing materials for you to use and solicit your resources, whether you're going, and for the bank statement program, which is what I see up there, I've got friends that are LOs, and we've increased their business 1-2 a month volume because they're going after in the networking groups like the BNIs, they're going after your financial advisors and your CPAs, your accounting firms, your business entity attorney groups that form companies, anybody, divorce attorneys, tax preparers, anybody that would deal with somebody self-employed, just phenomenal free use of any of these marketing flyers.
Yeah, and the great thing about it, Steve, you fill it out once and it populates for all the flyers out there. So you're not having to go in and, I want to do this for an interest only, or I want to do this flyer for a CPA. It fills it out all for you for every flyer we have for our investor cash flow, debt service coverage, ITIN. They're all out there. Use them. Exactly. The other cool features we have, are social media posts. We've got, asset qualifier, but I always go to bank statements. It's our most popular program. We have social media for Instagram and Pinterest, Facebook and LinkedIn. For borrowers, you can directly market to borrowers, or if you want to market to your referral source, realtors, we have them for Instagram and Pinterest towards realtors, and also Facebook and LinkedIn. Cash out, you're hearing a lot about cash out. It's not taxed. So really look at looking at doing cash outs for a lot of these borrowers too. And then really last and probably one of the most powerful presentations are we will do it, Steve, Scott, any of your AEs will do this on your behalf to your referral source. They'll present these programs and really inform and educate your referral source on these non-QM programs. And I'm telling you, it's one of the most powerful presentations you can do. You get 10 realtors in a room, you will get one of their own personal loans, whether it's for bank statements or 1099, as Steve mentioned, or you'll get a DSCR program on there. And we go in there, we don't say anything about Angel Oak. We just say we're one of your investors, and the presentation is all driven back to you. Take advantage of it. I have an AE here in Texas, did one Tuesday to 50 realtors. The loan officer was ecstatic. And I know we're coming near the top of the hour. We do, if you can stay on for a couple minutes at the end, take a short survey. We'd really appreciate it. We do these every month. We try to get better every month. Again, this is recorded. We will get this out to you before end of day today. But before we sign off, Steve, just give us something in closing, a tidbit, or something you've seen maybe in the last 30 to 60 days.
What I see actually quite often is the bank statement program where they have a fallout. They just don't qualify traditional, conventional, and now they've got a loan that's being denied due to ratio. So they come to us and then flip it to us and see if we can do a bank statement program for their self-employed because their tax transcripts came back, less income than what they intended. And that's pretty much, I'd say probably 70% of all my business is bank statement program. It's the number one product out there, and that's what I would be pushing as a retail LO because it's just tremendous, and the advantages and the buying power. There's just so much unlimited potential out there to capture that type of borrower. Yeah.
And Scotty, any last closing?
Two points really I'd like to make is, to what you just went over, you and Steve just went over in the marketing portal, John, that's gold, guys. I think it's extremely underutilized. You literally have full free marketing materials with all of the information already printed on it for you to market the bank statement program, like Steve just mentioned, to all of the sources that Steve just mentioned, the investor cash flow program. All of these things are right at your fingertips. You can literally customize a flyer within 2 minutes and paint the town with it. These presentations, like you mentioned, John, you've done them, I've done them, Steve's done them. The loan officers that have taken advantage of this information have literally packed the room with 40, 50, 60 realtors and been able to present on products and programs that your realtors are not used to hearing about. So you really capture their attention, and you're going to end up getting their conventional business anyway. But it's really more about, what can you do to get them in the door and then capture their attention. And that's the beauty of this. You have a flyer there to promote the event, and then you have the full presentation. Last thing, what I'm seeing out here is, look, let's face it, guys, we're all in the same market, right? It's a rising rate environment. The market is kind of resetting a little bit. And a lot of people don't realize that historically speaking, during these environments, non-QM volume has always gone up, because our products and programs become a little more valuable to the marketplace to help get people into homes. A lot of people don't realize that 80% or maybe over 80% of our volume is purchase business. It's always been that way. So this is what we do. People are going to continue to buy houses, but they might just need to have a little bit more flexible products and programs to get into those houses. And that's what these products and programs offer you. So now more than ever is definitely the time to get to know these products and programs, to get them under your belt, and to start to market them.
Yeah, I heard earlier this week, refis were down 64% versus last year. So, use this to, not just replace that income, but generate additional income. And really, it's about getting that buyer/borrower in a home. And we can really help you do it, because it's the fastest way to accumulate wealth is through home ownership. So, we had a lot of people on here. You took an hour out of your day to learn more about non-QM programs. So thank you very much. Hopefully we can serve you. For those of you that aren't here, that have closed loans with Angel Oak, we really appreciate your business and look forward to closing more loans with you. But it's top of the hour right now. But thank you, everyone. I'm honored to have two of the best in the industry on here, Steve and Scott. I love working with you guys every day. So I appreciate you guys taking the time out of your day to help educate our audience today. So thank you. Everyone have a great afternoon, and look forward to working with you guys down the road. Thank you.